Excellency, distinguished guests, ladies and gentlemen, good morning, good afternoon, and good evening to all of you joining us today from around the world. The fact that we are meeting today underscores the remarkable resilience of tens of millions of migrant workers and their families that have been facing unprecedented uncertainty and challenges over the last year. It also underscores a desire for and tremendous efforts in ensuring that their daily sustainable development goals are reached. And this is happening as we speak, one family at a time. I am Pedro de Vasconcelos. I'm the manager of the financing facility for remittances here at the International Fund for Agricultural Development. And it is my pleasure to be your host for the next 2 days. In this capacity, I first would like to welcome you to the 8th edition of the Global Forum on Remittances, Investment and Development and the 2021 celebration of the United Nations International Day of Family Remittances. Over the next 2 days, we will recognize the efforts of migrant workers and the positive impact of their remittances that these have on their families and communities back home. We will also use this opportunity to identify and support ways to build upon the lessons learned over the past year in meeting the call for solidarity from the Secretary General in support of remittance families. To open this global forum and observant, it is my honor and privilege to introduce you to Mr. Gilbert Humbo, President of the International Fund for Agriculture Development, or IFAD, Ambassador Ojve, to deliver a message on behalf of Her Majesty Queen Maxima of the Netherlands and United Nations Secretary General Special Advocate for Inclusive Finance for Development, and Martin Seychelles, Deputy Director General, European Commission, Directorate General for International Partnerships. With this, and without further ado, it is my pleasure and honor to welcome Mr. Humbo for his welcoming remarks. Mr. Gilbert, you have the floor. I believe you're muted, Mr. President.
Yeah, sorry about that. Thank you so much, Pedro, for this introductory remarks. Good morning, colleagues. Today's International Day of Family Remittances is a tribute to the 200 million migrant workers, and obviously their abiding commitment to their family members and the communities back home. Incredibly, despite the impact of the global COVID-19 pandemic, despite the loss of jobs and lower wages, despite the closing of remittance transfer companies, despite closed borders, a year into the crisis, we have seen that migrant workers kept prioritizing sending money back home. And amazingly, despite everything, the numbers barely changed. In a year that was marked by so much tragedy and loss, the officially recorded remittance flow to low and middle income countries declined only by 1.6%. It declined to 540 billion in 2020. This is a testament to the resilience, the resourcefulness, and the commitment of migrant workers driven by the reality of COVID-19 back home. And despite the fear that remittances flows will decrease like never before, leaving millions more vulnerable people, migrant workers and their remittances have shown the opposite, in fact. Remittances are the only large financial flow to developing countries that have remained stable during the period, this period of pandemic. Digitalization, both online and mobile-based services, enable and catalyze remittances flows. Migrant workers adopted digital transfer at an unprecedented speed, and this was paired with enhanced digital literacy program and diligent and responsive measures from the private sector and government alike. Mobile remittances increased by 65% in 2020 to 12.1 billion. This change was driven by a switch from cash after lockdowns and limited informal channels for senders and recipients alike. This is a very welcome change. Compared to traditional cash transfer, digital financial services have lower transfer costs and improve the financial inclusion of migrants and their families. As more people embrace digitalization, we expect to see the growth of new products and markets that benefit poor women and men who were previously excluded from financial service. The next step, I must admit, is to close the gender gap by addressing the barriers that prevent women from accessing and using mobile financial services. Across markets, women are 33% less likely than men to have mobile money accounts. Advances in technology must also reach the last mile, making remittances more accessible in remote rural areas where they have the greatest impact. And we know that the benefit of remittances go beyond the receiving families. These transfers support entire communities by keeping local economy running, making a tangible contribution to rural development and the sustainable development goals. Excellencies, dear colleagues, while it is true that remittances held strong through 2020, for poor rural people, that was no victory, only survival. In many recipient communities, the devastation, not only from COVID, but also from climate change, conflict, economic slowdowns, and from other pressures, this is real and persistent. During the past year, the Remittance Community Task Force came together, the members came together to raise awareness of the impact of the pandemic on the 1 billion people directly involved in remittances. Under IFAD leadership, the task force defined a set of measures for government and the industry to address the challenges faced by migrant workers, their families, and as well as the whole remittance market. These, in combination with other key action from Switzerland and United Kingdom, the World Bank and the Financial Action Task Force, have fed several global processes, including the recent menu of policy options for the consideration of by the head of state and government of the financing for development in the era of COVID-19 and beyond initiative, and more recently, obviously, at the G20 level as well. By working together, the international community was able to deliver as one to mitigate the full extent of the crisis, making remittances the largest source of family aid to developing countries today. We do believe that given better opportunities to save, remittances families will save more. Given appropriate investment options, remittance families will invest more. And given better mechanisms to invest in human capital, remittance families will live better lives. It is in this context that IFAD joins other partners on this International Day of Family Remittances to raise awareness and encourage sustained and scale-up action to help migrant workers and their families go from survival to a brighter future and to ensure that the world delivers on the Sustainable Development Goals for all citizens, urban and rural alike. Thank you so much.
Thank you, Mr. President, for your remarks. I would like to invite His Excellency Ambassador Hugeveen to deliver the opening remarks on behalf of Majesty Queen Maxima, United Nations Secretary General Special Advocate for Inclusive Finance for Development. Mr. Ambassador, you have the floor.
Good morning, Excellencies. Good morning, good afternoon, good evening worldwide. It's an honor and pleasure for me to give the following message of Her Majesty Queen Maxima of the Kingdom of the Netherlands. And she's, of course, the UN Secretary General Special Advocate for Inclusive Finance for Development and honorary patron of the G20's Global Partnership for Financial Inclusion. President Hungbo, Deputy Director General Seychelles, Excellencies, ladies and gentlemen, remittances are crucial resources to cover basic needs such as food, healthcare, housing, and educational expenses for millions of migrant families. They can help households building up savings, make productive investments, and engage in economic activities. When received through the formal financial systems, they can provide recipients access to a broader range of financial services and aid them in taking part in an increasingly digital economy. Importantly, they can be useful enablers for achieving the United Nations Sustainable Development Goals by 2030. Globally, 1 in 7 people are involved with remittances, either by sending or receiving payments. During the impact of the COVID-19 pandemic, remittance flows continue to be resilient, giving a vital safety net to many families around the world. In 2020, officially recorded remittance flows to low and middle income countries reached $540 billion. Impressively, only 1.6% below the $548 billion seen in 2019, despite predictions of a sharper decline. Excellencies, ladies and gentlemen, looking ahead, I encourage you all to continue to improve remittances markets through creating enabling legal and regulatory frameworks and ensuring greater transparency and competition to lower costs in order for more resources go to remittance families. It will be also crucial to increase the quality, innovation, financial support, and the range of financial products to better meet the needs of migrants and their families. Thank you.
Thank you, Excellency, for your kind words. It is now my pleasure to invite Martin Seychelles for his opening remarks as well.
Mr. President Hungbo, dear Ambassador Hugeveen, Your Excellencies, fellow development partners, ladies and gentlemen. It's my pleasure to join you today on behalf of the European Union for the opening of the 2021 edition of the Global Forum on Remittances, Investment and Development, following a one-year pause due to the pandemic. The European Commission has been the first financial supporter of the IFAD finance facility on remittances, contributing to its creation in 2007. And since then, we have always partnered with IFAD and other stakeholders to address the multiple challenges facing migrants sending remittances back to their home countries. Globally, remittances directly affect 1 billion people. 200 million migrant workers send a share of their earnings to help feed, shelter, educate, and support back home the health of 800 million family members in more than 125 developing nations. The amounts sent by the migrants working in the European Union are significant. In the pre-COVID context, they reached 50 billion euros, accounting for 11% of total funding flows received by developing countries. And the European Union is the second largest remittances sender after the United States. The European Union strives to promote cheaper, faster, and more secure remittances, including through improved access to financial services, to enhance the development impact of remittances in their destination, and to mobilize significant levels of migrant savings in sustainable development projects in the country of origin. We fully support the SDG 10 on reducing remittances costs to 3% by 2030, because we estimate that by reaching this would result at EU level in saving 1.5 billion euros in transaction fees every year. And there is already some progress. The average costs of sending remittances from the European Union to developing countries was 7.78% when the SDGs were approved. It is now 5.86%, almost 2 points less. Defying predictions, remittances flows have proved to be resilient during the COVID-19 crisis and have continued to constitute an economic stabilizer for developing countries and to provide a critical lifeline for the poor and the vulnerable in developing countries. Last year, we were indeed expecting the sharpest decline in history in remittance flows. But international mobilization by different actors, from individual migrants, private sector, public regulators, and governments to keep remittances flowing helped to avoid the expected collapse. In that context, the European Union, with the EU member states, supported remittances as a key tool of solidarity with the families of migrants. And during the lockdown, several EU member states had declared money transfer operations as essential services, allowing them to continue operating. Let me very briefly mention just some commitments that the European Union has taken specifically on remittances. The EU-funded Prime Africa initiative, implemented by IFAD, intends to support innovative business initiatives in Africa on remittances, promoting digitalization and financial inclusion. Through the EU Knowledge Center on Migration and Development, the Commission is also launching a global report mapping migrants' investment schemes throughout the world in order to facilitate the scaling up of initiatives to leverage the potential of migrants' financial investment. In December 2020, the European Commission funded a project named Leveraging Digital Finance to Increase Resilience, implemented by the United Nations Development Capital Fund, to support the adoption of digital remittances in 14 African, Caribbean, and Pacific states. And the European Union is also supporting the work done by the World Bank, CNOMAD, on remittances. More generally, the Commission is now working to accelerate the digitalization of remittances and investment schemes within the formal channels, to make remittances a key component for the post-COVID-19 economic recovery in developing countries. Despite COVID-19 and initial forecasts, remittance flows to low and middle income countries now once again surpass the sum of foreign direct investments and official development, and they are expected to increase further in 2022. But let me say it clearly, as managing an entity dedicated to international partnerships, well-managed migration is a tool to accelerate the response, and recovery and remittances are key evidence of that. The lessons from the COVID-19 crisis offer a unique opportunity to sketch out a new consensus on remittances for a unified and coordinated global approach to address remittance solutions globally. The expected collapse in remittance flows brought back global political attention to remittances and mobilized the much-needed extra effort at national, regional, and multilateral level, notably at the UN level and in the G20. The European Commission considers the Global Forum on Remittances, Investment and Development a key venue for making advancements on the overall remittances agenda. So I would like to thank once again IFAD for having been so resilient and having organized this virtual global forum. And I very much hope that we'll be able to continue meeting in these conferences in person next year. Thank you.
Thank you, Mr. Seychelles. Indeed, let's hope that next year we will. Excellencies, ladies and gentlemen, this concludes the inaugural session of this forum. And on behalf of participants that unfortunately are unable to applaud due to the virtual setting of this forum, I would like to thank you on their behalf for your remarks and contributions. So with this, I would like then to go to the next session and thanking you again for your participation. Thank you very much. And now we will bring up the next. So with this, I would like to invite our next set of panelists for the first part of session 1, Remittances 2021, Innovations and Market Resilience, dedicated to the realities of remittances and global markets, and that I will have the pleasure to moderate today. I have no doubt that the experts and practitioners will join me in saying that the past year has probably been one of the most dramatic years in the remittances industry. A lot has happened, and never before have the behavior, I believe, changed so dramatically, particularly on users of remittances. Last year, many of us came together around a special call to action in light of the expected impact of the pandemic around the remittances services. This concerted effort has led to the identification of numerous challenges, but also opportunities. Challenges around the industry and remittance services affecting those that use them as a means to provide to their loved ones back home in countries of origin. These challenges have illustrated new opportunities, and in so the market has also witnessed changes that were expected to occur much slower than they actually did. So the purpose of this first panel will be to review these trends and take stock of these new realities. For that purpose, we have the honor to welcome special guests today, all experts in their respective field, and help us understand better the new market realities and opportunities ahead. So it is therefore my pleasure to introduce you to the panelists. Veronica Stuttgart, she's the Chief Executive Officer and founder of International Association of Money Transfer Networks, or IMTN, and who will provide us with an overview of the status of the money transfer industry. Next, we will hear from Saad Farouk. He's the Senior Advocacy Manager, Mobile Money at GSMA, who will share the new digital realities in the marketplace and its ramifications to users both on the sending and receiving side of remittances. To address new business opportunities, linking remittances and financial inclusion, and particularly insurance, we will invite Michael McCord, Managing Director of Microinsurance Center at Milliman. And finally, we'll hear from Anka Bogdana-Rusu. She's the Partnerships Policy and Advocacy at C Labs, who will help us understand better the potential role of digital and cryptocurrencies and that they have, and hopefully will have further in the future. So welcome to all of you today. Happy International Day of Family Remittances. And without further ado, Veronica, I would like to give you the floor to let us know a little bit more on the status. A year and a half on the crisis. You have developed or released recently a report. It would be great if you could share with the audience of the Global Forum across the world the findings as well as that. So we'll ask everyone to stick please to the limits of the time that was allocated. So we'll make sure that we will not go too much overboard of the timing today. Veronica, you have the floor.
Thank you. Good morning, good afternoon, good evening, wherever you're connecting from. Thank you, Pedro, for your kind introductions. For those that don't know IMTN, Pedro already explained it, but we are a non-profit membership organization representing the voice of the remittance services providers around the world. We work with regulators, policymakers, development agents, governments, and other stakeholders. Today, I will speak to you about the state of the industry. I will start with how did we arrive to where we are, what happened in 2020, including regulators, interventions, customers and remittance services providers, and finalize with what's next. So what happened in 2020? Before the COVID pandemic struck the entire world, the remittance industry was gradually shifting away from customers using cash to the use of digital channels. However, when the pandemic hit, and the lockdowns were imposed in many countries, the industry was affected. In order to understand the impacts and challenges the industry had on the pandemic had on migrants and the remittance industry, as Pedro mentioned, we decided to survey the industry. First, we did a survey the first survey was in March 2020 in collaboration with UNCDF. The findings were shared with regulators and policymakers around the world. We continue with the one-to-one video calls with remittance services providers in order to identify more qualitative data. Then also a series of webinars were hosted during the year. And we finalized with a survey at the end of the year that resulted in the annual report that I'm sure the organizers will share the link, so I won't go into details into that. The impact of the pandemic varies from one region to the other, but it was clear that while the digital channels were increasing, the traditional and cash was decreasing. This was largely driven by the lockdowns that were in place, and that in some countries, remittances were not considered essential. The digital service providers saw a significant growth, a growth that normally would have taken a few years, was accelerated in this period. A growth on the average of transaction value, that is how much money the customers are actually sending home, a growth on customers, some customers coming from the traditional cash channel to the digital, but we noticed a few other new customers. These customers were customers coming from the informal channel to the formal channel. And that was due to the lockdowns in place and travel restrictions. Cash was not able to cross borders. But all in all, scaling up was the priority. For those that were offering cash services, it was scaling up to digital. For those that were offering already the digital services, they increased the online presence by concluding digital partnerships that allow them to expand their operations in more regions, and in some cases offering additional products. So by linking products and services with the financial technology, they were able to offer digital transactions, mobile money, electronic payments, and more services specially designed for migrants. To mention a few examples, we have a member in Malaysia that partnered with the Construction Labor Exchange Center, which allows the workers in the construction industry to receive their salaries digitally. Another of our members launched in Zimbabwe a service that allowed workers in South Africa, Malawi, Zambia, Botswana to send their groceries to their families over their platform. This was key during the lockdowns, where there was a limited access of food and prices were fluctuating too much. Another member launched a medical plan for refugees to support them in case of financially in case of hospitalization. Then there was also insurance policies for migrants and many more. I will encourage everyone to read the report IMTN did on social responsibility, where we explain these examples, and also some of the videos that we have where our members explain themselves the examples. It is important to highlight this because the remittance services providers are often looked through the eyes of the revenues, which is undoubtedly an important element, but depicting them as companies exclusively profit-driven would be a misconception. In fact, these remittance services providers care about the well-being of their customers, and they are constantly working to improve the service for the migrants. Who better than remittance services providers to understand the needs of the financially excluded migrants? With regard to regulators' intervention, the intervention of the national regulator has been necessary in many cases in order to allow flexibility in the rules controlling the remittance market, at least temporary. In many countries, fee transactions were waived. The limit for individual transfers using mobile wallets were increased. Electronic KYC verification has been permitted in some jurisdictions, allowing the remittance services providers to onboard new clients online, and campaigns to incentivize digital remittances have been launched. About the customers. With regard to the customers, whenever they could, they opted for the digital channel, including the use of mobile money. We have seen a change where mobile money and non-payment options had already been growing in popularity for a number of years, but we noticed an important shift from cash to mobile wallets. And that's the reason why mobile remittances increased 65% during 2020. With regards to the remittance services providers, there were many challenges. So to mention a few: declining remittance volume, closed locations, limited working hours, staff isolation, liquidity issues, access to financial services. Actually, this one it's something I would like to highlight, because during the lockdown periods, we noticed an increase of the practice of bank de-risking that affected very much the whole industry and the migrants. Working from home, the pandemic affected the entire world, but because some of the countries have been more affected than others and the lockdowns were implemented in different time, the staff of this remittance services provider had to become more responsive to the constant changes in real time. Daily, they have to work with the customers in order to help them to figure out what the reality is on the ground, on the market, and in some cases on regulations. Like in the case of Nigeria in December 2020, when the central bank released an unexpected directive policy requiring remittances to be paid out by agent bank in US dollars rather than Naira. This unexpected change in regulation required a very speedy reaction from the remittance services providers in order to comply with the new regulation, and also to inform the customers that were totally unaware of the new regulation. So what's next? Remittance have proven to be a lot more resilient than many have anticipated. The reason for this is that remittances is one of the last things the migrants will get when they find themselves in financial difficulties. Beyond the challenges, they decided to continue supporting the families sending home, using savings, cutting consumptions, and even using the fiscal stimulus that they receive from their host countries. And this is the reason why the World Bank reported in end of May that the decline in remittances to low and middle income countries was only 1.6, a lot less than what it was predicted in April and October. I think the next question is whether the global economies will be able to be as resilient as remittances have proven to be during 2020 and beginning of 2021. Because if we look at certain economies like the US and Europe, they will have to pay later for the cost of having supported the economies during the COVID crisis. There's also a lot of talk about digital currencies in remittances. Part of the remittance industry is starting to shift from the traditional settlement process. We see more companies using digital currencies for settlement for transactions rather than working with banks. By this, they reduce the need of intermediaries and reduce the cost while increasing speed. This new shift is likely to change the remittance ecosystems. And let's don't forget about El Salvador, which I'm sure Anka will cover about that. The ongoing acceleration of digitalization is pushing towards financial inclusion in many regions of the world. The financial and digital inclusion will be a key element in the process of economic recovery. The G20 made enhancing cross-border payments a key priority in 2020 and is now focusing on implementing the roadmap through public and private sector collaboration. It is a very ambitious plan, and it is not the first time remittances are on the agenda within the G20. Will it be different this time? Thank you.
Thank you, Veronica, for this insight. There's been a lot of questions in the meantime from many participants, some on the risking. There's a lot that needs to be done. Obviously, the global forum this year is a little bit shorter, so we will not be able to address everything. And I just wanted to say that tomorrow's the next session, we will address some of the issues of de-risking as well. But thank you so much for Veronica for these remarks. And as you hinted during your presentation, the digital aspect that has been also discussed a lot is also of a matter of great interest, and that leads us perfectly for the next presenter, Saad Farouk, the senior advisor, advocacy manager for mobile money at GSMA. And I would like to invite you, Saad, to give us more of an insight of the situation for the past year and a half and future prospects in this regard. So you have the floor. I will kindly ask you if you can keep it to 10 minutes. Otherwise, the next moderator, the next session, Kilian is going to sue me. So thank you so much, Saad. You have the floor.
Thank you, Pedro. It is a pleasure speaking here today. And thank you, Veronica, for the very useful insights that you've just shared. I will be talking about the important role of mobile money in enabling digitization and increasing consumer access. Next slide, please, Alessandra. So over the past decade, mobile money has grown from a niche service to a mainstream offering. The industry now accounts for 1.2 billion registered mobile money accounts. 300 million of these are active on a monthly basis, which is a 17% increase from 2019. With 310 live mobile money services in 96 countries, mobile money is available in most markets where access to financial services has traditionally been low. Mobile money providers are processing over $2 billion a day in transactions. The industry has over 9 million registered agents that play a vital role in converting cash to digital value and vice versa. 5.2 million of these agents are unique, and the agent network digitizes $500 million a day globally. In 2020, the value digitized was $189 billion. And the mobile money industry is processing more than $1 billion in international remittances every month. Next slide, please. So mobile money is playing a vital role in increasing access to formal financial services as well as digital remittances. As I mentioned before, the industry accounts for over 1.2 billion registered accounts, and this is a growth of 13% from 2019. This has primarily been driven by a shift towards greater digitization during the pandemic. In terms of the regions, Africa has the highest number of mobile money accounts, which is over 500 million, followed by South Asia at over 300 million. Next slide, please. Now, if you look at within Africa, Sub-Saharan Africa added 59 million new accounts in 2020, which is close to 5 million new additions a month. This was followed by the East Asia and Pacific region, which added 46 million new accounts. This strong and steady growth suggests that the industry is having a profound impact. Customers are using mobile money in more advanced ways and in virtually all aspects of daily life. Next slide, please. Now, transaction values are continuing to scale. The industry processed $2 billion a day last year, and this is projected to increase to $3 billion a day by the end of 2022, which would make the annual transacted values exceed $1 trillion mark in 2022, thus creating a significant impact on the lives of people in the emerging markets who otherwise may not have access to formal services. And we've seen the impact during the last year when the pandemic enforced a lot of people to rely on remittances digitally in emerging markets. Next slide, please. Now, digital remittances continue to dominate mobile money flows. $70 billion was transacted through the mobile money ecosystem in December 2020. Of the 12% digital inflows into a mobile money account, over 8%, and I mean 8% of this 12%, were from international remittances, which came straight into a mobile money account. Next slide, please. Mobile money remittances have been a lifeline supporting communities during the pandemic. As you can see from this graph, and as has been pointed out by the president before, the international remittances via mobile money increased 65% between 2019 and 2020, as the industry processed over $1 billion in 2020. This was a result of higher transaction values and account balance limits permitted by regulators in many countries, and also as a result of strategic partnerships between mobile money providers and MTOs. Mobile money continues to provide an affordable channel that extends the reach, security, and convenience of international remittances. Next slide, please. The GSMA conducted a survey through DMA Global, and I'd like to share a few key insights here. The number of mobile money corridors more than doubled between 2017 and 2020, increasing from 53 to 108. I'd like to say here that these corridors are where mobile money can be used to send and receive international remittances in the corridor. Now, according to the survey, the average cost of sending $200 in international remittances using mobile money is 3.53%, which is almost 45% lesser than the World Bank's global average of 6.38% for Q1 this year. The main driver of cost in mobile money international remittances is the foreign exchange element. As an example, the average cost of sending $200 in West Africa, which has a single currency, is 1.63%, compared to 7.62% in East Africa, where foreign exchange is involved. This calls for more work on reducing the foreign exchange element in the remittance sector. Mobile money is gaining the attention of international organizations such as the UN's World Food Programme to reach those affected by a crisis quickly and cost effectively. The World Food Programme transferred $192 million to beneficiaries last year through mobile money. Next slide, please. To enable the mobile money providers to offer increased coverage and access to affordable and digital remittances, the GSMA has been putting greater emphasis on A, fighting financial crime and fraud, B, promoting best practices in consumer protection, and C, increasing transparency and data protection. Mobile money providers that have implemented these best practices are providing safe, reliable, and resilient financial services to over 200 million accounts globally. Next slide, please. However, there is a need for greater collaboration between stakeholders. And when I say stakeholders, I mean going beyond the mobile money industry as well, to address some of the challenges. For instance, licensing remains a key issue, and there is a need for more level playing field in the remittance sector. We encourage national authorities to make the process of acquiring licenses more efficient and the criteria more transparent. The second issue is around de-risking, which Veronica also mentioned. De-risking continues to harm the remittance sector as some remittance service providers are still unable to gain access to banking services. We appreciate the IFAD and Remittance Community Task Force efforts to raise this issue in the blueprint that was published last year. And we encourage regulators and policymakers, and specifically the G20, to expedite a solution to the issue of de-risking, as it is harming the industry's efforts to convert the informal flows to formal. The third issue is around ID. Not everyone has access to a formal ID document. We appreciate FATF including digital ID in the updated recommendation 10, and we encourage national policymakers and regulators to implement digital ID and eKYC in their frameworks. Lastly, winning customers' trust is vital to the attainment of the UN's SDGs and for the commercial success of the remittance sector. Therefore, we call upon all remittance service providers, regulators, and donors to join hands to increase financial literacy and promote the use of digital remittance channels and services. Next slide. So this brings me to the end of my presentation. Thank you, and I'll hand over to Pedro now.
Thank you so much, Seth, for this for sharing the data and the recommendations as well from the perspective of GSMA. It's much appreciated. As you know, they're in line, I think, with a general overview what also other stakeholders are seeing. So indeed, a lot more is of course required in terms of information as we develop this new trend, or as many call it, the new hype. From IFAD, we welcome this because it was the missing link between remittances and full financial inclusion. Digitalization is really a bridge on that, and we welcome this new adoption that your figures are showcasing. So beyond being very welcoming, it's also a very nice transition to the next presenter, which is really at the heart of the what we call the rural transformation at IFAD. We do believe, since over now more than 15 years working on this topic, that remittances are really a bridge to financial inclusion. And by that, we mean access to services such as credit, savings, insurance, or pensions. Digitalization can be the tool in between that facilitate those, as we have seen. And this is why in this particular session this year, we decided to focus on insurance, because that has been what many of migrants and their families wanted. These are services that have worked. We've tested some at IFAD over the last years, and we saw during the crisis that there was a lot of uptake about these services. They made sense for families, and this is why it is a pleasure to have now Michael McCord with us, with whom we actually also work. You work with many partners, but as a global and renowned expert on the subject matter, and now with remittances as well. I would like to invite you to share with you your views. Does this product make sense? How can we link it? And your views on this would be greatly appreciated. So, Michael, I'll give you the floor for your remarks on this. Thank you.
Excellent. Thank you so much, Pedro. It's an honor to be on this panel and to be here speaking to everyone today. So greetings to you all. And I want to take you on a bit of a journey. If you can go to the next slide. I want to take you on a bit of a journey, and I want us all to remember who these people are. These migrants bring some reality to our discussion. The numbers are quite amazing that we've heard from Veronica and from Saad. And let's think about the clients for a moment. This is Teddy, and she's a small business person in a rural area in Uganda, in Kantule, which is a couple hours southwest of Kampala. She's got 3 children, ages 3, 5, and 6. This is 5 years ago, so 2016. And she lives with those children and her mother, her aging mother. If you could just click on the next. This is her mother on the next slide, on the next panel. Thank you. This is her mother, Nayatoni. Sorry, hard with the names sometimes. But this is Nayatoni. And so this is the family unit 5 years ago. And now Teddy is working and making about $5 a day in her small business in the rural area, selling vegetables and fruits and such. And she is having certainly some problems financially. And so they develop a strategy to send her, Teddy, you can go to the next slide, to send her to the UK to do some work as a migrant worker in a clothing factory. And so she goes to the UK. And so this is where she's been now for about 5 years. And so making clothes, she makes about $800 a month, of which she sends $200 back home on a monthly basis, just like if we hear the 300 million people that make monthly active payments, just like all of them, she's making her payments back at home. And so she has basic mandatory health insurance that she had to have as a migrant worker, but nothing else in terms of insurance. If you can go to the next slide. So what we have here is the basic transaction for her, right? She's sending money into the remittance system, whether that's through mobile money or through remittance organizations or any of those organizations that facilitate the transaction. And she gets money back to her mom. Her mom uses the money to help put her children in school and to help feed the children and to provide other benefits, because the mom certainly isn't able to make much money now. She's not able to work well. And so what you see here now is a very common journey. It's really a journey that all of us have talked about so far, right? The basic journey of remittances and the strategies that migrants follow. The thing that we don't often talk about, if you can go to the next slide, the thing that we don't often talk about is that issues come up. So over the 5 years that Teddy has been in the UK working, she's had a drought. And so her small plot of land that her mother was farming didn't produce anything. And this is one of the neighbors showing, how bad the corn is and how bad the harvest is. And so when this happens, Teddy had to send more money home, in addition to the regular monthly payments. Next one. And then her child got sick, really sick actually at one point. And all that comes out of Teddy. There's a call and, Teddy, please send more money because your son is sick. Waswa is ill and he needs to be hospitalized. And so she has to send more money. And one more, please. And then the grandmother, even Teddy's grandmother, gets ill and has to be hospitalized. And so she has to send money again. And I think, this repetition might be boring for all of us, but this is the reality of these migrants. Is they're going overseas, they're trying to make a life, they're trying to earn more money, and yet they're constantly on the hook for family needs. If you can just do the next one. So effectively what's happening here is Teddy has become the insurance company. So she's Teddy's insurance company, sending the $200 a month back on a regular basis, and then sending on average another $100 a month to manage all these risks and these problems that her family's having. And so this makes life extremely difficult for her. And, in some of the opening remarks, we talked about Ambassador Seychelles, for example, was talking about, leveraging the migrant investments. Migrants can't make investments if they're the insurance company. They can't manage their cash flow. They can't make the kinds of investments that they need to make because they're stuck being the insurance company for their family back at home. We need to be thinking about ways in which we can shift that dynamic into a way in which she is able then to more effectively use her money, to more effectively manage cash flow, make investments, make savings, do all these great things that we should be able to do, migrants should be able to do. Okay, if you can go to the next slide. So one of the things that certainly is a possibility and should be, I think, a strong focus now is the opportunity to support and protect her family back at home with remittances and remittance-linked insurance, right? The family members are back at home constantly drawing on her cash flow. Why aren't there ways in which insurance companies can get linked to that incoming cash flow and get paid a small premium on a monthly basis with those monthly remittances, and the insurance company then can provide decent insurance cover so that when these things happen, Teddy isn't on the hook all the time. She isn't the insurer anymore. The local insurance company is. And so this will allow her to have better management and control of her funds and her finances and the ability to make investments in her future and the future of her family. Without that, she's continuously having to deplete her resources. And I think this is really, really important as we think about how are we going to create maximum benefits for low-income migrants and their families back at home. And I think, there's a number of issues here, right? There's issues of access, and we've already spoken a couple times about digitization and how digitization can enhance access. Saad was telling us. And technology, I think, is really important, and it's creating opportunities for us to be able to do some innovative things with the money when it comes in. We have to think about motivations. And one of the issues here is that typically what will happen is if the money comes in the traditional manner, where it comes directly to the migrant family, and then the migrant family has an opportunity to purchase insurance at that end, their motivation is typically to take all that money. It's not to buy insurance because they already have insurance, right? They have Teddy. And so they don't have to buy new insurance. So their motivation is not to buy insurance. So the motivation is from Teddy. So how do we create a structure whereby Teddy can then buy the insurance without having to send separate remittances? Because even at 3.3%, this is still expensive when you're doing this every month, right? And so how can we find better ways? And so there are a number of efforts that are being made to do this. What other issues do we have? We have issues of regulations. Now, clearly what we have here are cross-border issues, because you've got insurance on one end being purchased or sold or indicated on one end in one country and then purchased in another. How do we mitigate those? And both President Huangbo and Queen Maxima both mentioned the importance of bringing the world communities together. So let's start thinking more about how can we facilitate on a regulatory basis these kinds of movements. And so let me just say that I think, on this International Day of Family Remittances, let's remember that there's more than just cash that has to go back and forth, that we have to help protect the migrant and the migrant's family from these risks that occur. And once we do that, then we have a better opportunity to create investments and other opportunities. So thank you very much, and enjoy the International Day of Family Remittances. Thank you.
Thank you. Thank you very much, Michael, for this insightful presentation. Insurance is indeed a basic concept, still the existing lag, in the industry to adopt this concept in regards to remittances. Sadly enough, it's been amazing, but I think there's a change. But I really want to thank you for bringing down to earth to this family member, Teddy. Indeed, for many, remittances are the biggest family insurance plan that exists. And if you want to sell insurance, obviously you need to take that into account. Providing more services and adequate services that can link remittances with other needs. And insurance is a need, because that's what you said. That's what remittances do. So why can it be facilitated? This is, I think, a win-win situation for also remittance service providers, because this is an added value that makes also the institution more attractive, I would say, to the migrant that understands perfectly the concept of remittances or insurance, let's say, because by sending remittances, that's what they were doing. They're trying to guarantee that in times of crisis as well, that their family is covered. So no better than the 200 million migrants understand that concept. Yet there's not a market approach that can facilitate that. We've seen this, as I mentioned, through IFAD on this pilots that we're testing, and the adoption. Onboarding was amazing. So there is a way to do that, and we are very happy to see that there are some giants in the industry now looking at this, where there a couple of years ago, 5 years ago, they was really not interested. Migrants and their families, yes, okay. Now it's a different. I think it's a different story. So we really look forward in the next year or two, as this new products proliferate, to be able to showcase that it is viable. So thank you so much for this. I would like to say that the topics that we're discussing today is just the tip of the iceberg. And we're going to continue during the subsequent sessions of the GFRID to explore on that, on insurance, on mobile, on financial services, and also to the next session or to the next topic, which be on digital and cryptocurrencies. There's a lot of questions already in the chat asking about cryptos. We all heard what's happening in El Salvador, where now the adoption for Bitcoin, what does it mean to remittances? My next speaker, Anka Bogdana Rusu, will try to elucidate some of it. It's an entire universe. It is very difficult for some to understand the ramifications that cryptocurrencies might have on the remittances ecosystem. And the basic question is, what are we trying to say? For a migrant to use Bitcoin, I wonder how many in this panel or in this audience right now have any Bitcoin. Would they know how to do it? There's a lot of question marks. So it is, of course, an idea that rather interesting, projects some questions. And there's indeed ignorance, even myself, about, well, can the migrant, or does that mean that the recipient will need to receive Bitcoin? So it is something happening in the back office, if we can say, or in the front end. We can see in El Salvador that is coming to the front end, but interesting enough, there's a lot of hype around this, and what does it mean to the industry and for the ways that over now more than 30 years migrants have been sending money back home. So Anka, really, can you help us out in understanding a bit better, in a simple way? Obviously, I'm going to try the impact that cryptocurrencies have been having, and could have in a near future in this industry. Anka, I'll give you the floor and the stats.
Thank you so much. Yes, I will try to be fast and efficient, just like the transfer of value on blockchain with my remarks. First of all, thank you so much for having me. For those of you who don't know Cello, and I'll assume that's the majority, Cello is a mobile-first, carbon-negative, open blockchain platform and a network of organizations that are all working towards the same mission, which is to create a better financial system that can bring the condition of prosperity to everyone. And of course, as part of that narrative, remittances are an extremely, extremely important part. We can't have shared prosperity if we're leaving behind those that are most vulnerable. I wanted to start by grounding us a little bit when we talk about improving remittances and eliminating pain points of what are we actually talking about. So bringing it back to the Sustainable Development Goal 10, reduced inequalities, and really deconstructing the language behind the goal. Because there is a lot of hype around digital currencies and remittances. And I think it's really important to go into the nitty-gritty and see, what does faster mean? What does safer mean? What are the blockers for financial inclusion to migrants? And with that in mind, really approach things from a perspective of, what can blockchain and digital currency do nowadays, what it could potentially address, and ultimately what it can't address, because it's a much wider industry level type of conversation. As you'll see here, I've tried to go into, what does faster mean? It looks at speed. It looks at also how easy and fast can you access the currency that you receive, and are you able to cash it out easily? In terms of safety, I think anti-money laundering is really important, but also let's talk about usability. Let's talk about privacy. These are some of the topics that have come up quite a bit in the light of the new Bitcoin law in Salvador. What does cheaper mean? Is it just the cost of intermediaries? What are we doing about volatility? What are we doing if access to a cheaper transfer of value requires to begin with a very costly and high-tech access point? And last but not least, inclusion means that we want migrants to be part of the formal financial services and have access to them. They need a history of transactions to be able to prove their creditworthiness to others. And ultimately, there needs to be interoperability between the different systems, because otherwise we're just recreating systems in parallel. With that in mind, I'd love to go to the next slide and cut beyond the hype of Bitcoin, non-Bitcoin a little bit to go into what are the categories of digital currencies that we talk about nowadays in the context of remittances. First and foremost, I think you'll find some very familiar logos there. We have Bitcoin, Ethereum, Ripple. We also have others like Stellar that are what I would call the first generation of cryptocurrencies. They were the first way of transmitting value on the blockchain. They are able, because of the decentralized and transparent nature of the blockchain, they're able to be transferred very fastly. Settlement is done within a few seconds. The costs are low because there are no intermediaries needed. There are services that add intermediaries to this, but the cost is low. And in terms of privacy, transactions on the blockchain are private because they're encrypted, but I'd like to point out they're not anonymous. And I think that is a very important distinction when we talk about traceability of funds and anti-money laundering. This also first generation of cryptocurrencies suffers from what some in the industry call the original sin. They use quite a little bit of carbon emissions to be able to be mined and generated. And it is important, in my opinion, that as we are looking at advancing some of the sustainable development goals, we don't backtrack on others, such as climate. One of their other issues is they're extremely, extremely volatile. They can go up and down in value quite a bit, which is part of the reason that a lot of the folks are looking at them as more of a digital store of value than a means of exchange. And this has led in the next few years to the development of what I'd say is the second generation of cryptocurrencies, which are issued on blockchain. They have the same advantages, but they tend to be more energy efficient, some of them carbon negative or carbon neutral, and they track the value of a certain price of the asset, whether it's fiat currency or another type of asset. The benefit there is also that in terms of the mental model that people who send and receive funds have, they don't need to get used to another currency, try to make the exchanges in their mind, but it's a currency that is stable and pegged to something they're already used to transacting. And I think the value, most of them are pegged to the US dollar. More recently, we're seeing the launch of stable currencies pegged to the euro. In terms of remittances, I know there was a question earlier. I think we can look at the benefit of having the equivalent of hard currency coming into the country easily when we look at remittances using stable coins increasing. In the past 18 months, we've seen a lot of conversation around central bank digital currencies. This comes out of a natural desire to keep up with technology, understanding that privately issued currencies can at some point disrupt the ability to influence monetary policy and financial stability of the system in a country. And honestly, explorations to better understand not necessarily how to issue a currency, but how to regulate what is existing right now. The Bank of International Settlements has published a report saying that virtually every central bank right now is in some phase of exploring, whether it's research, learning, educating itself around central bank digital currencies. With this primer in place, and I know I'm going very fast, I'd like to look a little bit of how these different types of digital currencies can work for remittances. And on the next slide, you will see a head-to-head comparison of where different currencies can help more than others. One cost that I think it's not brought up frequently enough, it's the liquidity cost for the industry. Having to, as a money transfer operator, to pre-fund an account with 48 hours in advance is proving to be extremely costly. Instant settlement on the blockchain, like Veronica mentioned, is something that a lot of the folks in the industry are starting to look at because of that ability to cut costs. But I would also like to look at the fact that money transfer operators are considered by certain banks high-risk clients. They've seen widespread closure of correspondent banking accounts, and this is something that the industry has seen for quite a bit. I want to point out that any kind of currency that is being issued on blockchain is fully traceable. We can see, while protecting the privacy of the end user, we can see in just the headlines around the recent Colonial Pipeline hack, where Elliptic, which is a blockchain analytics company, was able to trace the flow of funds within 48 hours, enabling the FBI to get the funds back within 2 weeks, which is something unheard of if we're talking in the world of cash or even traditional financial services. One aspect that will keep coming up is how usable are these funds? And I think it's important to highlight that a lot of the currencies out there are not designed for mobile usage, which I think is a bit of a flaw. Quoting the data from GSMA, most people interact right now with their funds via their mobile phone. And more importantly, it is important to understand that having a smartphone should not be a prerequisite for being able to access your funds easily and cheaply. On the next slide, I want to acknowledge a few things, which is blockchain can't solve everything. The current remittance system is interconnected, but is not interoperable. Neither are currently the digital currencies that are out there. And it's a standard that we should be working towards more and more. If we're talking about financial inclusion, and this is where I'd love to go back to something that Michael mentioned, on the blockchain, you're able to access your history of transaction, and you should be able to use that to prove to insurers that there is a stream of income that you can tap on for insurance. You can use the programmability of some of these funds for people who send money to be able to predetermine that 5% of their monthly remittances go towards insuring against risk. And this goes wider into ecosystem acceptance. If you have currencies that are not accepted by merchants, if they're not accepted by banks or other financial providers, you're really stuck in a parallel system. And so in the world of digital currencies, there's still a really long way to go towards ecosystem acceptance, where if you have 100 stable coin to represent the sterling lira, you are able to use that to access goods, services, and to pay for insurance. Last but not least, as we advance digital technologies to address remittances, it's important to acknowledge the digital divide. Focusing only on digital and cryptocurrencies for remittances would be a huge mistake. People still need access to all sorts of transfer of funds. And unless you're able to access easily your funds in a way that speaks to you, whether you are extremely financially literate or digitally literate, that risks actually creating more issues. And so I think increasingly, and recently the UNICEF blockchain fund funded a company named KataniPay that has successfully adapted smartphone crypto wallets to USSD standards. So I think it's a huge, huge step forward. Last but not least, I think I have 1 minute left. The news of the day. We're seeing a lot of conversation on the next slide, a few of the headlines around the Central Bank of Nigeria actually paying people to stop remitting in cryptocurrencies, but remitting through approved accounts. Salvador's law was based on the premise that adopting Bitcoin at legal tender is able to advance both financial inclusion and help include and drive the remittances the Salvadorians in the US are sending home. I think that is the right instinct. As always, the devil is in the details, and asking questions around, how are you able to cash out those funds? And if the limit, as it is now with Bitcoin ATMs in Salvador, is $50, that is really high threshold for people living on less than $5 a day. And honestly, it's right now, blockchain and digital currencies can really help lift some of the pain points that remittances are facing, but it takes an industry approach to be able to ensure proper channels for cash in, cash out, and to help fuel and ensure access to other services and products such as insurance, which are extremely important to really make sustainable progress towards SDG 10. Thank you.
Thank you. Thank you so much, Anka, for this. There's a lot of questions, so we will not be able to answer live all these questions right now. However, I want everybody to rest assured we have copied everything with the names, and we will be posting this on the website. We will ask our speakers as well to respond. There's several questions on crypto. Have these been are these being measured right now? Really, a quick answer, Anka. Are these being measured overall in terms of the ones cryptos, currencies in relation to remittances for certain countries?
Yes, the measurements generally come from the exchanges, who will point out how much is the inflow to countries such as South Africa, Philippines, Nigeria, Argentina, and others from remitting countries such as the US, the UK, Europe.
Okay.
So yes, mostly the exchanges are measuring this.
Then we will ask you to also to respond specifically to this question in more details if we can on that. There's been a lot of questions on how migrants basically save as well if they don't have access to financial services. Well, the response is they're doing it, but informally. This is what is oftentimes in a cookie jar under the mattress. So things do work, but they're not efficient. And I think it addresses also to many of the questions of the linkages with other services beyond financial, like education, and how can remittances help that? Well, it's the question of services not being provided or adequate to link to remittances. And this indeed for the private sector, not only the remittances industry, but other service providers, is an opportunity. As we saw for the example of insurance, what we have said today with insurance is also valid for savings. Promoting savings among recipients can increase the credit history of that recipient, that in turn can have access to loans based on the profile that he generates through the savings. So basically the credit history that will be generated. So these are many ways that we see remittances can promote financial inclusion and what it means: credit, savings, insurance, and pensions. As I mentioned, all the questions that we have, we're going to be answering this live. We'll hope in the next few days we will be able to put with the kindness of the panelists, and we will also provide some of the linkages to documentations in that regard. We are already past the time, and I already received a note from the lawyer of the next moderator, Killian, who will moderate now a discussion on digitalization, basically at IFAD, through the Prime program that was mentioning earlier on in Africa. We've been working not only to promote cheaper access to remittances in low and middle income countries, but also to promote their digitalization. And this is why we've been looking very deeply into the digitalization aspect, being the first mile and the last mile, because there's some caveats on digitalization in that regard, as to know if these benefits that for remittance families can be fully absorbed. We know that there's infrastructure issues beyond remittances that might impede the digitalization at the receiving level, and we are looking into that. So we have right now under our specific program on mobile remit that Kilian will be presenting, and then subsequent discuss with panelists addressing this. He will be able to answer also some questions on digitalization. So without further ado, allow me to introduce the next session, and its moderator will introduce the discussants. Kilian is a digital and mobile expert in remittances, and as I mentioned, he's the mobile remit expert and lead in IFAD. He has a career specializing in finance and development spanning over 25 years, if I'm not wrong, Kilian. So without further ado, and just having stolen a couple of minutes from your panel, I would like to give you the floor for this next session, and thanks our panelists for their contribution and subsequent contribution in answering the questions from the audience. Thank you very much, everyone. And we will move then to the second part of this session one on the private sector. Thank you. Kilian.
Thank you, Pedro, and good morning, everybody. Yes, apologies, my lawyer does charge by the minute and not the hour, so yeah, I had to get them involved there. Listen, thanks so much to Sad and Anke, Veronica and Michael for a very insightful session there. We'll be looking at some of the issues they brought up in our own deep dive here. And good morning, everybody else, or good afternoon or evening, wherever you are. And of course, happy International Day of Family Remittances. So my name is Kilian Clifford. I'm the lead, as Pedro said, of Mobile Remit Africa workstream here at IFAD. And as he alluded to, this session will be a deeper dive on one of the topics just covered by Sad specifically, and that is of mobile remittances, or to give the session its full title, Mobile Remittances and Digitalization, a New Market Trend. So we have an expert panel lined up to give us their insights on this topic, and I'll introduce them in a moment. But before I do that, I'd like to give a very brief presentation on some of the work we've been conducting here on on mobile remittances. So what is Mobile Remit Africa and why do we need it? Well, the COVID-19 pandemic has seen an increased push to digitalization of remittances over the past 12 months for reasons we've just heard from our plenary. And within developing countries, the digital channel of choice is often the mobile phone. And typically this is the lowest cost channel for remittances, in turn fulfills a number of development goals, as well as increasing the resilience of migrants and their families. And within the financing facility for remittances, or FFO team here at IFAD, we felt there was a gap for a knowledge base based on mobile enabled remittances. And that gap is to gather, analyze data, generate the insights, and offer policy guidance on this particular topic. At the same time, IFAD has a program of work called Prime Africa, which you've also heard about. It's co-funded by the European Union, and which seeks to promote the use of secure and low-cost remittance channels for African corridors, amongst other things. So marrying those two things together, we've created Mobile Remit Africa to lay the foundations of this new knowledge base. And our first task was to create an index that measures a country's readiness to adopt mobile enabled remittances with data that is sourced both publicly from publicly available data sets such as the GSMA or World Bank, etc., as well as adding our own proprietary research. And the index is a composite index incorporating a mix of pillars which measure, amongst other things, the enabling regulatory environment, the market readiness to adopt mobile enabled remittances, and also the inclusion environment. And each of the pillars constructed contains variables of different weightings underneath, which taken together generates a single aggregate score for each country. And we felt that a single score like this can be easier to interpret than tracking a lot of different separate indicators, of which there are 17 underneath. So using this index will be possible for users, whether a private or public sector, international donors or civil society, to drill into the pillars and variables that compose the index. And how the index is constructed will allow for a peer comparison with other countries, as you shall see in a moment. And also, as new data comes to light, the scores will be updated, index scores will be updated, to allowing a country's performance to be analyzed over time. So today we're just presenting an overview of some of the initial findings to the index. And what it tells us is of a relatively positive story for the preparedness of African countries to take advantage of the continued digitalization of remittances. What we see here, apologies if the text is slightly small, but it is that almost a quarter, 24% of countries analyzed achieve the highest score of 80 or over. And it is these countries that are most prepared to adopt mobile as a channel for international remittances. But 3/4 of those surveyed secured a medium score of 60 or higher. So taken together, what that means really is that the majority of countries in Africa, with the aid of some policy interventions, are in a good position to take advantage of mobile-enabled remittances. And overlaying these scores into a map of Africa, it can be seen that the higher index scores are clustered around the mobile money strongholds of Eastern and Western Africa. And mobile money is, of course, very relevant here, because when we talk of mobile-enabled remittances, particularly on the receive end, generally we mean those remittances terminating in a mobile money wallet. So a mobile money is a e-money wallet or electronic money wallet offered generally by mobile network operators. And those operators have cost efficiencies and efficient distribution network, which helps to reduce the cost of remittances. And looking at the scores, some of the scores on a regional level across East and West Africa, we've averaged them here for the local economic bloc. So the East African Community, EAC for East Africa, and the West African Economic Monetary Union, UEMOA, to give it its French acronym. So both regions score higher on almost all pillars compared with the rest of Africa. The red line is the regional scores here on these radar graphs. But the exception is the consumer protection pillar for West Africa. That's the graph here on the right-hand side, which scores lower than the continental average. And if we look at that consumer protection pillar for West Africa and drill down into the variables underneath, we can see that it scores lower than the continental average for two particular variables. That is the use of trust accounts and also deposit insurance. So drilling down like this is an example of the analysis that can be performed using the index tool. And this exercise can be repeated across pillars, across regions, across countries for more granular level understanding of what comprises the index scores and where interventions, market or policy, might be optimally applied. And turning now to the Prime Africa countries that we mentioned. The Prime Africa is a 15 million euro program implemented by IFAD, co-funded by the European Union across 7 African countries. Those countries are Gambia, Ghana, Kenya, Morocco, Senegal, South Africa, and Uganda. And at a broad level, these countries, the Prime Africa program seeks to promote the use of low cost and secure remittance channels through innovation and partnerships. And of course, promoting mobile as a remittance channel is an example of that. So I've included the 7 countries here on the radar graph on the left. And at first glance, on average, they score reasonably well. They score at the same or higher than the overall continental average for all the pillars. But that masks a high degree of variation, as you can see then on the bar chart on the right. So for instance, Kenya, which is one of the countries in Prime Africa, is the top rated country on the continent with an index score of 96, which brings the average up. Perhaps no surprise given the success of M-Pesa there. But also it's very enabling on a number of other measures. Whereas Gambia, also a Prime Africa country, had the 5th lowest score on the continent at 53. And the Gambia's lowest score is largely due to the fact that mobile money is in its infancy there to a degree and has only just relaunched, but also that today market participants aren't terminating remittances into mobile wallets for one reason or another. South Africa on the right is an example of a country that also has the same issues. So it scored a relatively low 56. But Prime Africa investments and intervention in both these countries and the other prime countries are expected to yield higher scores over the medium terms. So our analysis in Mobile Remit Africa also includes details of flows and revenue shares for mobile-enabled remittances. I've included one on the chart here, but they're relatively technical in nature, so we won't go through them now, but suffice to say, these will be included in the final report, which will be launched in a few weeks and which you will get notification of. And for anyone who has an interest of how mobile-enabled remittances work under the hood, I recommend that you go and check that out. But in the meantime, this particular presentation is available for download on the Summit site, the GFRID Summit site. So in summary, what have we seen? We've seen that the push to digitalization requires its own knowledge base. That's why we've created Mobile Remit Africa, the first output being the Mobile Remittance Enablement Index. And what it shows us that most African countries are in a relatively favorable position to take advantage of mobile-enabled remittances, but there are still some policy and market system interventions to bring up enablement scores. The index is a living, breathing document and will continue to be updated as new information comes to hand. And all of this will be available on IFAD's RemitScope Africa web portal later in the year. So RemitScope is a hub of wider remittance and data insights for the continent, not just restricted to digital or mobile. I've included a screenshot of it here on the slide. And if you visit that, users will be able to query the index that we just talked about, its data, and access other mobile related analysis for remittances in time. And then the hope is that then as stakeholders, we can all advance the digitalization of remittances in an inclusive manner. And inclusive is an important word here for the betterment of migrants and their families. So that's it. Thank you for listening to that presentation. And now I'll go ahead and introduce our panel. If I can just stop this. Okay. Great. So thanks for that. So if I can ask all panelists, please, to turn on the camera. And I'll introduce you now. So we have a great panel lined up here today. And I will introduce you by the order we have on the agenda. So on the summit agenda. So first up, we have Antonia Esser, Engagement Manager at Senfree. We have Claire Sibthorpe, who is Head of Connected Women, Connected Society and Assistive Tech at the GSMA. We have Dare Akodiju, Founder and CEO at MSF Africa, and Judith Upholzer, Managing Executive for Public Policy of Vodacom Group. Welcome to you all today. Now, before I begin with the questions, just a couple of brief housekeeping points. This session has a hard stop at the top of the hour, so it's 12 CET or 11 if you're in London like me. It's being recorded so you can watch it later. We have interpretation in a number of different languages. You can see that by the globe at the bottom. And if you want to ask any specific questions, you can do so through the Q&A function. It'd be great if you could specify a panelist who you'd like to address that to. Now, Dare, if I may ask you the opening question, we've heard a lot about the trend to digitalization over the past 12 months from both the plenary and the presentation that I've just given. But for you, what's been the cause of these trends, and do you expect those trends to continue, or are they fleeting? And what is the impact in your business, and what will it be for MSF Africa going forward?
Thanks, Kieran, and good afternoon, everyone. Indeed, I think I would put it down to probably two things. I think there is a much more longer term trend, and there is the COVID effect, of course. The longer term trend, I will call it the API trend, which essentially is allowing more and more remittance players to connect seamlessly or more easily to the last mile in terms of distribution, especially digital last mile. You know, when we're talking about payment into mobile money, which you mentioned in your presentation, or into bank accounts, which also will count as digital. So that has been a trend that started probably 6 years ago, and we're seeing that accelerating, and it's certainly here to stay. What that means in practice is like now you can have maybe, I don't know, someone who's from Uganda living in London, starting a money transfer company, which maybe will focus on the UK to Uganda corridor, but API will allow this person to still offer some sort of long tail into many other places, including into Philippines if they want to, into Argentina if they want to, because the effort to do that is relatively marginal using this API play. So I think that trend will continue and will continue to move more and more remittance onto digital channels. Obviously, we had the COVID effect. And really what COVID did is probably at 3 levels. Number one, on the sending market, it pushed a lot of senders to try digital channel, especially in the early hours of the lockdowns in the US, in Europe, and so on and so forth, where it was not clear if the agents will stay open, whether people will be able to go to agents to make payment. Digital became the only choice, and people tried it, and people liked it. So that became quite sticky. What it also did, at least here in Africa, is to encourage policymakers and regulators in general to really make it easier for digital. And digital, by and large, in Africa means mobile money. So we saw a lot of intervention and a lot of great enablement from all sort of regulators across the continent to make it easy for remittances to flow through digital channel, being mobile money. And the third thing probably is also, which we don't talk about quite often, is the intra-Africa remittance itself. I mean, we obviously, when we talk about remittance, we think about the north to south, but the intra-Africa remittance is definitely one that is primed for a massive move to digital, because the people on each side of those are people who are completely familiar with making payments or receiving payment through mobile. So you put all these things together, I do think that we will see the COVID impact, but the long-term trend is just this APIization, if I could use that word, of the remittance around the world.
Thanks, Dare. And I'm just wondering then if Judith, within Vodacom, the Vodacom group, do you recognize the same trends that Dare just mentioned? Yes, digitalization was happening anyway, but COVID, it has been an accelerator, and policymakers have stepped in to some degree to give it an extra push. Would you concur with that? And how have you seen the impact on Vodacom's pace of business, particularly with respect to international remittances?
Thank you so much, Kilian. It's my great pleasure to be with all of you today. And also thanks to IFAD for convening this important, timely discussion. I think I fully concur with my colleague, Derek, who has outlined kind of key trends. And what we've really seen during the pandemic year is that digital financial services have not only been a critical lifeline, but we've really seen an acceleration today, and Derek has pointed at that. M-Pesa is the largest fintech platform in sub-Saharan Africa, with nearly 50 million customers, with operations in DRC, Ghana, Tanzania, Mozambique, Lesotho, and Kenya, hopefully also soon Ethiopia. And for both the banked and unbanked, M-Pesa today on the continent is a preferred way to do just about anything you can imagine on the payment side, due to its affordability, safety, and unmatched convenience. Obviously, that also includes remittances. And I think the importance and relevance of mobile money in many African countries has significantly accelerated over the past year. And if we take a closer look at the data, we really see this supported. So many of you will recall that in April 2020, the World Bank predicted a sharp decline of about 20% due to the economic crisis induced by COVID. So now, 1 year later, I think the report came out in May 2021, the World Bank reported that despite COVID-19, remittance flows remained resilient in 2020, and only kind of registering a small decline. And actually, if we look at sub-Saharan Africa, excluding Nigeria, the remittance flows have remained largely resilient. So the key drivers that have been identified, and that's also what we see on our side, is a shift, an accelerated shift in flows from cash to digital, and from informal to formal channels. So as the pandemic expanded, we knew that at Vodacom, we had to step up our efforts. And I think what has been critical is public-private partnership, and really ensuring that mobile money can live up to the expectations, ensuring quality services and safe and reliable financial access for all. And what has been paramount in this is working closely with central banks across our footprint in a concerted effort, ensuring financial services for millions in particular during this pandemic year. So just in terms of specifically for Vodacom on the remittance side, as I highlighted, and I think that's been a trend across the industry, we have seen significant growth of about 60% year-on-year transaction increases. So
specific to international remittances, Judith?
That's specific to international remittances.
Same as GSMA
so that's
numbers,
a significant increase. And again, kind of to put that into perspective now, and I think Derek kind of highlighted that in the abstract, we have about 25% of all remittances across Vodacom's M-Pesa footprint that land in an M-Pesa wallet. And in Kenya, I think that's often been highlighted, this is about 70% in the past year. So what the data really shows us is that customers are switching to digital. And I think if I reflect on the past year, we really see an opportunity now to accelerate digital financial service offerings, to accelerate innovation in the remittance space. And what we need to do, and that again requires a collaborative effort, is remove existing barriers to competition. And then
so
I believe
this is a point we'll definitely come back to in a moment. So if I could say, just hold that thought on what we could do, working with the public sector and regulators on that. But in the interest of time, if I just could move to Claire, and just in terms of the business effect, we've just heard from Dari and Judith there on how the push to digitalization is shaping their businesses. But of course, to take advantage of the push to digital, you really need to be digitally included. Now we know, for instance, that's 50% of remittances to developing countries go to rural areas, and they are a significant contributor to rural development. Yet it seems it isn't always straightforward to digitally include either these areas, especially, but other areas within developing countries. So with your Connected Society hat on, perhaps, could you tell us what the state of digital inclusion is across the developing world, and what the biggest barriers there are today?
Sure, and thanks so much for having me here. It's great to be part of this conversation. As you say, we need to make sure that we're not leaving people behind, that people who need it the most can access these services, but there is a gap in digital inclusion. So I'm going to talk about mobile specifically, which is the way most people are accessing the internet. And there's been great strides, more than 50% of the population now use mobile internet. But we see sort of two issues. We break it down. One is a coverage gap, that there's those who are living outside of areas that are covered by a mobile broadband network. Now, this has been reducing and it continues to narrow. It's just under 500 million people now. But I think also it's really important to flag that there's a usage gap, which is much, much, much bigger. There are more than 3.2 billion people who live in areas covered by mobile broadband that don't use the internet. So that's 6 times bigger than the coverage gap. So it's not just sufficient to get the networks out. We need to support people to be able to use them and address the barriers. And the unconnected population are disproportionately poor, less educated, rural, female, persons with disabilities. You mentioned rural. So in our report last year, we highlighted that people living in rural areas in low and middle income countries are 37% less likely to use internet than those in urban areas. So that is certainly a significant issue. What are the causes? So if you look at both issues, on the coverage side, I say it narrows, but reaching remote and rural areas is still a challenge. And it's an economic challenge. So uncovered communities are predominantly, rural areas where deploying infrastructure can be twice as expensive, with revenues 10 times lower than urban areas. So, reaching that last population is a sort of an economic challenge we need to address. But as I mentioned, the usage gap is a much bigger issue, and it's increasingly critical that we address this. So again, what are those barriers? So affordability is a key barrier. It's the biggest barrier and particularly handset affordability. It's the biggest barrier to owning a phone. It's the second biggest barrier to using the internet once you are a phone owner and aware of the internet. So that's one challenge we need to tackle. Literacy and digital skills is another big barrier among phone owners in our research who are aware of mobile internet. This is the biggest barrier that they face to using the internet. Awareness of mobiles and the relevance of it to their lives, for all the reasons that we've been hearing about this morning, is increasing, but again, there's more work to be done. There are also other challenges around safety and security. Can be an issue, people struggling to access the internet, who maybe lack formal IDs or some usability. Social norms and structural inequalities can affect women's access. So there's a whole range of barriers that we need to tackle. We need to look at both usage and coverage.
And Claire, just to come back to the point you made there on rural people, I hope that I get this right, but the 37% less likely to use mobile broadband, is that, you think, a coverage gap issue or a usage gap issue?
Yeah, so I mean, the coverage issue certainly is much bigger, as I say, in particularly remote areas. But I think the bigger issue is the usage issue, because most of the people who are not connected are in areas with coverage, but are just not able to use it for some of the barriers I mentioned. So yes, there is a coverage issue. Yes, we still need to, but the usage gap is by far the bigger challenge, and addressing the barriers like affordability, skills, and things like that, we need to tackle if we're going to allow people, enable people to be able to take advantage.
Okay, thank you for that, Claire. And Antonio, if I may turn to you. Well, today we've heard a lot about digital and the push to digitalization, but amidst all this digital evangelism, and we've just heard from Claire then how large sections of our communities can be digitally excluded, and that runs the risk of digital inequity in developing countries if we don't get this right, it seems. So, based on your experience, what are the risks to those who might end up through no fault of their own being digitally excluded?
Yes, thank you, Killian, and thank you so much for also setting the scene for me, Claire, and also in the previous sessions, Anka, as well as Maiko, made very good points that I want to build on. So yes, if we look at the success of the digitalization of remittances, we know that the flows have improved we have made great strides in that through digital. During the COVID period, and especially in 2020, what we have also seen is that 20 million people globally have been pushed into extreme poverty, which is the reverse for the first time in decades in poverty alleviation successes that we have seen. So we are seeing a reversal. At the same time, we are seeing how remittances, the flow of remittances was larger than in 2020 than foreign direct investment and official development assistance combined. So it is a very major lifeline for many. And I think the question we need to ask is whether the increases in the digital transactions did proportionally fall also on the lower income segment. So could the lower income segment, and particularly lower income, rural, vulnerable families, take really advantage of the digital advancements, or are they actually worse off and have been negatively affected by this digital push for digital because it came at an expense of expanding kind of the physical network, which we already heard is so important. So when we talk about digital remittances end to end, we are talking here in the termination in mobile wallets. And if you really face the realities of very many people on the continent, if they now receive for the first time a mobile remittance, it sits in their mobile wallet. Yes, the transaction is counted as digital, but they cannot use this digital value to the same extent that they could use cash. So the need for cash out is still very central to the mobile money story. We need huge numbers of agent networks, which we already heard are very costly to establish. We are facing business models for challenges for agents, specifically around rebalancing their own cash flow, being able to facilitate the cash in and cash out. And during COVID, we have seen a large decline in many active agents. And that all has an effect that if I sit in a rural area in Uganda, like we heard in Michael's example, my child is sick, I go to the clinic does not accept mobile payments. So I need to find an agent where I can cash out. I need to find an ATM or a bank branch where I can cash out my remittance. And that is where we're not seeing the same kind of expansion that would be needed to make sure that even the most vulnerable who rely so disproportionately on remittances can access the funds in a time of need. And I think those kind of nuances and really understanding how the poorest of the poor are affected by a push to digitalization is very important. We need more data on that. And I would very much also like to hear from the providers themselves if that is something we can track. But we are certainly hearing of examples in sub-Saharan Africa where actually the poorest of the poor have been much worse affected and have not been able to be reached by digital remittances in a usable format. Because ultimately, financial inclusion is not just about access, it's also very much about the usage and what you can do with the digital value. And that is where we're still seeing risk of a growing digital divide.
Yeah, thank you, Antonia. As you mentioned, with the growing digitalization of the payments ecosystem in many developing countries, and with the APIization, just to use Dari's term there, we still a duopoly of systems where one digital payments, you know, and we need cash. Cash is still a very important side of that too. And Claire, we've just heard from Antonia there on those risks of digital exclusion and the risks to users, but of course, some particular user groups in society risk more exclusion than others. And you alluded to them there, I think earlier on, rural, poor, and also women, but focusing specifically on women. Can you speak to some of the barriers they face, whether it's digital inclusion or financial inclusion? What sort of progress or changes have we seen through the pandemic? Have they been for better or for worse on this front? And please do feel free to reference your gender gap report, which I understand is out tomorrow. So Claire, over to you.
Thanks. As you mentioned, we're launching our mobile gender gap report tomorrow, and we were able to collect the data in COVID, which is very exciting because we do really, as has been mentioned, really need to measure and understand what's happening. So I'm happy to share a couple of sneak previews, but also invite people to come to our launch to hear more tomorrow. What we were worried that the gender gap was going to grow as a result of COVID because women are being disproportionately impacted. But the good news is that so far, at least, the gender gap in mobile internet continues to decrease. It's now down at 15%. So women in low and middle income countries are 15% less likely than men to use mobile internet. So it's still substantial, but less than last year. It's unclear whether, the direction of travel, there are some, worrying signs as well. But that really has been driven, I think it has been, by South Asia. So we saw that primarily South Asia was decreased significantly from, it was 50% in 2019 to 36% in 2020. So again, still substantial, but it's really driven by one region. So, work to be done around, in other regions as well to continue to go down, and we need to continue to monitor it, but we have a lot more insights and information on this tomorrow. And women basically, they face the same barriers as men, the same ones I mentioned earlier, but I think they are disproportionately impacted because of structural inequalities around education and income, strong social norms, which affect women's access and use. So we need to think about those factors as well. I hope that gives you the answers to the question that you're asking. Yeah.
Yes, thanks, Claire. And it's a tantalizing, I guess, glimpse of what might be revealed tomorrow, and we'll be sure to join. It sits quite neatly, the Gender Gap Report presentation tomorrow from the GSMA, between our own two sessions for the GFRID Summit, between sessions 3 and 4 tomorrow afternoon. So we'll all try and join that. Antonia, just turning to you again on the issue of digital and financial inclusion, if we try to look more at the positive side of things and based on the work you do at CEMFRI, if we get this right, if the digitalization of remittances is inclusive, how then does that drive further digital financial inclusion, as it were? And then what are the development benefits of that, particularly for migrants and their families?
Yes, absolutely. So what we know from research, which is quite interesting, is that remittances are a big driver of getting people into the formal financial system, interacting for the first time in the formal system, because the need to kind of transfer value over distance is very well met and cannot necessarily be easily mimicked by the informal system. So there is a real need for people to transact value over distance, and remittance services are this driver into the formal financial system. So once the person has a good experience with that service in itself, the trust in formal financial services overall increases. And if they have a need, we all have a need to manage risks in our life. Unexpected events, crises that hit, we do need formal financial tools to help us manage those risks. And that is really the purpose of financial inclusion. We don't want to include people for the sake of being in the financial sector. Ultimately, financial services are there to assist people in developing or increasing their own welfare, reducing poverty, being able to give a person choice in order to assist with overcoming hardships. So I think once we have people can demonstrate value in the formal financial system through, for example, things like remittances, then the added value of additional services, like we heard insurance from Michael, we hear savings, access to formal savings accounts. We hear of transaction history being built through remittances, which can ultimately feed into a digital identity. Actually, it can create a digital presence for you if you don't have access to an official document, for example. Those are kind of all value-added things that ultimately help you in managing your risks. And what we are seeing in terms of demand from remitters themselves, we've done several research pieces on this, is there is an increased demand for investment vehicles. People want to stay connected to their home countries, want to invest, want to be part of the development of their home countries. And so I think remittances, apart from enabling the first access to the financial system, are also very important in creating human connections, in creating networks, and being able to expand kind of economic opportunities for remittance recipients as well as senders. So it's a very powerful tool. And we are also working under the PRIME project actually with providers on the continent, with financial service providers, remittance service providers, both banks and digital providers, in specifically understanding the digital identity piece and how we can really make use of technology to unlock the digital identity, not just for remittances, but for other financial services. So the ecosystem is being expanded, and remittance service providers are being supported in implementing and making full use of the opportunities in the digital space.
Thanks, Antonia. Dara, just a question relating to MFS in the chat, acquiring as to your strategy going forward. It seems to be for the remaining countries, maybe you don't cover, but I'd like to maybe collect that strategy question with what Antonia was just mentioning on financial inclusion. And you know, I've read a lot in the press and perhaps on your website as well when I've looked there, is that Africa seems to be either partnering or investing a lot with fintechs, and particularly on the insurance side. So curious to whether you could elaborate on that strategy there and explain how you see mobile enabling remittances interacting with the nascent digital insurance sector. And I think Michael McCord also touched upon this in the plenary earlier.
Absolutely. And, you know, obviously being, touching 320 million mobile money users across 35 countries, facilitating flows from the global north into Africa, but also between African countries, give us a spatial vantage point to think about, you know, where this industry is going today, but also where it's going tomorrow. And really, for us, the first thing I would say is it is important to understand the key trend, the secular trends, so that we don't get trapped into optimizing for today versus optimizing for tomorrow. And one of the things we have to keep in mind is who is the average African right now? And the average African is urban. And the urbanization trend is continuing. Doesn't mean we shouldn't build for the rural areas, but we have to understand that the 25 years old female who is globally connected is currently the average African. And we have to also understand what are the lead indicators to future remittance flows or cross-border payment flows. And those are typically two things, right? It's migration and it's trade. And if you look at where are people going when they leave Africa, and I think the South-South migration in general is growing, right? And if you focus on Africa from that perspective, 70% of migration from Africa end up in Africa. So that means that if we look at the secular trend, we will see more of the intra-Africa and the intra-Africa trade growing. We also have to, when we think about this as remittance as an entry point for inclusion in general, we have to understand a little bit where this is going. So I believe there are three things we can attach to remittance: convenience, resilience, and eventually prosperity. Convenience is embedded in digital, and we know that, so we don't need to spend much time on that. We as MFS Africa, we want to try to test more around the resilience and eventually the prosperity. We see the prosperities as moving a little bit more from understanding the flows, and we know that about half of the flows that we are facilitating today intra-Africa are trade flows, not remittance flows. They're using remittance channels because it's what has been provided, but they are more like a trade flow. So we understand that, and we need to do something about that. But the resilience piece is where we see an opportunity around insurance, and that's why we're investing in companies like Inclusivity, which you mentioned, because we believe that indeed, this digital channel can provide some possibilities around building this resilience, whether it's around healthcare, which we know health disaster can be something that set people back in terms of income and prosperity for years if you do have a dramatic event for yourself or within your family. We know death is a tragic event in Africa and tend to also absorb a lot of money from families in funerals and sometimes when this is not planned for. So our thinking is to really pilot and experiment around this. We together with Inclusivity, we've been doing some work in Rwanda, between Rwanda and Uganda last year, which quite encouraging result. We want to do more of this across Africa. And that's where I want to end up to say, we also as a company, we certainly are, but I think as an industry, we have to be modest about what we can do. I don't think we will replace policymakers and government in bringing prosperity in Africa. And I think as much as we would like to include everybody, and as MFS Africa, we made this public, we want to touch 500 million people across Africa by 2025. But we cannot do this if there is no light in the villages. We cannot do this if there's no road going there. We cannot do this if the policy that are put in place does not encourage players like Vodacom to extend 3G networks or 5G network and so on. So I know there are policymakers listening to us. I want to plead that the private sector is not going to replace what government can do, and we should not take government off the hook. There is a huge role that policymakers can make to bring financial inclusion. And what people like us can do will always be limited by the choices they make.
Thanks, Dare, and made a number of interesting points there. First, the importance of South-South remittances and migration within Africa. 70% of migrants within Africa end up in another African country. And I think you're right, and the future of remittances in Africa, or at least the focus, should perhaps increasingly be on those South-South remittances. And then you talk about the policy enablement or changes that could happen to help us, help the private sector at least give some sort of a coverage to rural areas, you're saying, more generally. And Judith, maybe I'll give that last word to you on that. If we're looking to increase either whether it's intra-Africa, and if you have any opinions on that, I'd love to hear any comments on that. More generally, if we're talking about this push to digitalization and with respect to kind of groups who are left out, whether it's rural poor women, etc. What are the policy changes you would like to see that would enable a company like Vodacom to increase their coverage of these groups, and also to push remittances, whether it's regionally or globally?
Thank you so much. And I would like to join there in the plea, which I'm not going to repeat, but I think it's quite urgent. And also what Claire has highlighted, which are both the significant access and usage gaps. And of course, a lot could be said around those. But I think for the purpose of our discussion, let me focus on barriers for remittances. And I think what is specifically holding us back in the remittance space, over and above, of course, the access and usage gaps that we need to address, are slow licensing processes, long-winded approval processes for single corridors, in some cases up to 12 months, and then restrictions or prohibitions on the send side. And I think on the send side, I want to dive into that very briefly. So we need to be conscious that on average, 80% of the transaction value is captured by the sending entity. So driving competition and digitalization also on the continent requires to unblock the send side for digital players. So if I look at our footprint, we only have regulatory approvals, send approvals in 2 markets, Kenya and Tanzania. And here we face restrictions with only 5 corridors being open in Kenya and 2 in Tanzania. If I contrast that to receive, we have over 50 open receive corridors. And it's clear that to replicate some of the success that we would and what we see on the receive side, we really need kind of central banks to enable the kind of send side to take off. So the good news, and maybe I will end on this because we haven't had a lot of good news lately. So there are a number of concrete steps that central banks and the public sector at large can do to drive competition and innovation, and that will ultimately help us to meet the SDG goals before 2030. So the plea kind of joining there here is allow send, streamline and fast track approvals, and specifically allow mobile money operators to utilize hub-led models such as MFS that drive efficiency and time to market. And I think if we accelerate on that, then we can accelerate access to affordable, safe remittances on the continent.
Thank you, Judith. And I think we've run a little bit over, so we'll bring it to a close there. And thank you for that bit of positivity to end on. There's lots of comments here in the Q&A and the chat echoing what people have said. And Antonia, I think you've struck a nerve there with for us trying to remember that some may be excluded if we don't do this right in an inclusive manner, but others quite excited about the market push to digitalization we are seeing. So in summary, and we've had a lot to talk about, but unfortunately so little time, it's been a very insightful session. It seems that the trend to digitalization is set to continue. That genie is out of the bottle. It was happening anyway, as Dara and Judith said, but the pandemic has accelerated, and it will continue to disrupt business models when it comes to remittances, with some being better to take advantage of that than others, and a couple here on this panel. And of course, we can do it in a more positive way, in an increasingly inclusive way, with relevant positive policy interventions. Yet in this rush to digitalization, we cannot forget that not everyone can take immediate advantage. And Claire from the GSMA has told us there remains, despite improvements, a persistent usage and coverage gap with digital connectivity across many developing countries, which affects specific user groups more than others, including rural, poor and women. But we've had some progress, at least on that, over the last 12 months, but there remains regional differences and work to be done there. We've heard from Antonia on the risks of digital inequity and exclusion if we don't proceed with an inclusive digital agenda. But if we get it right, there are many development goals that can be achieved, and it's right that we focus on that and on this Day of International Family Remittances. And those development goals include enabling the attainment of many SDGs, but also Objective 20 of the Global Compact on Migration, which calls for faster, safer and cheaper remittances. And that has enormous benefits, particularly in the context of migrants sending money back home to their families. So with that being said, I'd like to thank our panelists again, and I'll hand the floor back to Pedro, who will speak briefly on this afternoon session, which is the observation event, very special event within the UN for the International Day of Family Remittances. Pedro, you have the floor.
Thank you. Thank you so much. Really a couple of sentences. Thank you for this fascinating and very timely discussion. It's been great. It's been pre-recorded. I think we need to rewatch it, and we're going to grab some aspects of that. There's so many that I want to tweet about of what you all have said. So thank you so much for this. Before I conclude, I just want to say that a lot of these questions that we had a tremendous amount of them. We are going to send it back to the discussants and the speakers and try to post this as well with their response on the website. And I want to say that this has been just the first round of discussions that will continue in the virtual series of the Global Forum on Remittance, Investment and Development. So if you felt frustrated because you wanted to know more, don't worry, we're going to continue this discussion. But I think this was a fantastic starting point for that. Finally, for this afternoon, I will invite you all for the official United Nations observance of the International Day of Family Remittances that is going to be open to more than the member states, so all the panelists of all the participants of the Global Forum. So we really would like to invite you to participate from 3 to 4:30 this afternoon. Member states will come forward in their support of this day, the industry, of course, and obviously on the millions of migrants that basically send and the families that benefit them. So thank you so much for your participation. Thank you so much for the discussants and the panelists, and we will hope to see you this afternoon, and of course, tomorrow for the last 2 sessions of this forum. Thank you again.